Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the USMJ sector. Rightfully so, many people are wondering why I'm in a bathtub doing analysis, and the answer is that I am in a honeymoon suite where the bathtub is the focus and center of attention of the room, and table space is certainly not. So we're going to look at a whole bunch of names here, and again, what stands out to me just quickly running through these names so far is how distinctly different so many of these setups are. There are very clear bulls, and there are very clear bears. And we have to obviously know the difference between the two and look to be playing and have our game plans established around what those trends are. We cannot treat the sector as an individual entity in the sense that everybody's doing the same thing, because that's not the case. So looking at GWPH, we had a bullish reaction to earnings and we hit all-time highs. A lot of profit taking from there, but we're just looking for a daily high or low. We got all the way up to 196 and we pulled all the way back down under 175, a very significant 10% pullback. So we're looking at anything over 163.19 to be a daily high or low. We need the hourly trend to change back in favor of the bulls to be confident the daily high or low has been established. And here on the hourly time frame, we can see the low of the day from Friday, the high of the bounce, and we will still need a clear hourly trend change to be confident the daily high or low has been established. There's enough space left in this range from the last 4 days that we would anticipate a daily lower high would likely result from the shift looking for that daily high or low. Then we'd form a lower high and see this range tighten up over next week. And if you looked at the Canadian MJ video, we have a lot of individual names in that sector that are shaping up to form a tightening range on the daily time frame as well. But we just need a little bit more bull follow-through, which is what we need in that sector as well. So another green day or two, and that tightening range will be the most likely scenario, in my opinion. Bulls to have a little bit more of proving to do for that to be the case. IIPR is trying to hold this key support, and you can see we've broken just below it, but not significantly. So I'm looking at the most important resistance on the daily is our double top at 88. And actually, it's more of a quadruple top at this point with how many times we rejected right from that. And here's our clear base. So we haven't closed above 88 and we haven't closed below 79. And we're looking at the tightening range. And we made on Friday all the way back to the middle of that range. So whenever I'm looking at, where we stand and whether the bulls or the bears are favored, if our range is 79 to 88, that's a $9 range. And I could say that 83.50 puts us right smack dab in the middle of that range. So with where we stand right now, $2 below 83.50, I can see that the bears have a slight edge compared to the bulls. And looking at the weekly time frame, if we do break this range bearish more significantly, you can see we're trying to hold the exponential 12-period support. But if we break more bearish, the most important support level for me is 75.56. If we break 75.56 from here, it will be the first very clear shift in this weekly chart ever since the 100% plus run-up from the December low. So bulls are clinging on here, but they need to see a bit more follow-through. And let's look at what the hourly chart looks like from Friday's action. Just looking for an hourly high or low to form, 83 and 84.27. Short-term resistances. Bulls want to hold 81 Monday morning and make their way back up to the middle of the range in the 83.50 area. Curaleaf is a lead bull. This is the strongest name in the USMJ out of the major players, and the reason being, in my opinion, is because they're shaping up as the sector leader, just like Canopy was in the Canadian space, and it's a reason that they are the top holding in a lot of these new US ETFs, and we're grinding here against this all-time high as the range is tightening up, and it looks like we're going to see a very clear break Monday or Tuesday with a volume spike associated with it. The bulls have favor for this break, but as you can see how many times we've rejected here, we've rejected from 15.30, 25, 18, 14, have to see all those levels break on one bull move. So we need to break 15.14 through 15.30 on the same bull move with a volume spike associated with it, and when that happens, we are likely going to see a new all-time high. So keep a close eye on the volume for Curaleaf, because if the S&P 500 bulls cooperate with some strength on Monday, we could be looking at an all-time high test on Curaleaf, and I may be interested in initiating a short-term trade position, just looking for that bull spike, trying to get over 1575, and I will be interested if we can get over 1530. So Curaleaf, definitely a lead bull to be watching in the space. CWeb had the bear break of its tightening pattern. We had the daily equilibrium playing out for about 5-6 weeks, and it broke bearish, and we're now watching an inside bar from Friday's trading. 2090, and actually it's technically not an inside bar because we did get a higher high by 7 cents, but with no follow through, we could say 2090 and 2097, both a little double top. If we break that level more convincingly, there is a gap to fill at 2292 to be watching, but we also have to be cautious of the potential of a daily bear flag. If we get this hourly trend change and no follow through on Monday or Tuesday, then that daily bear flag is going to be the potential possibility. And we're still in a weekly uptrend. Anything on the weekly above 1751 keeps that uptrend in control. But clearly with the big bear volume spike this most recent week, we had the negative reaction on Thursday after the bear break had already taken place from the technical bear reaction. So I have to be watching for a lower high because we're still in a clear downtrend on the daily. So we need a trend change on the daily for the bulls to be confident that our weekly higher low has been established, and we've been in a daily lower high pattern ever since that all-time high was hit. TRUL is another name that is breaking bearish. We have broken the support level, and 1643 broke as well. So we zoom out to the weekly time frame, and this pattern that had been tightening for about 4 or 5 weeks did see a bear break. We have not formed a weekly higher low yet. It is still an uptrend. 1497 is the must-hold level. You can see every week has been a lower high the last 6 weeks in a row, and that pattern has to break for us to be confident a weekly higher low has been established. So on the daily time frame, anything under 1810 is just a lower high. We closed at the low of the day on Friday, and again, the names that closed at the low of the day on a bullish market environment day, with CGC showing strength, Cron closing at the high of the day, Curaleaf closing strong, the S&P 500 bouncing, any individual name that closed at the low of the day definitely stands out for its weakness. So we're looking for weekly higher lows for CWeb and TRUL, but those bulls better show up sometime in the next week or two because we're running out of space to work with on those weekly uptrends. Need daily trend changes to be confident our weekly higher lows have been set. IAN has seen a bear break as well. 591 was support. We had another level at 609 trying to hold that support level. I made an entry in IAN and sold on May 3rd and May 6th. The reason for selling is noting and being well aware that IAN was showing weakness comparative to its peers. So I am interested in IAM from a fundamental perspective, and I still have a small core position because I've been flipping it. I have a lot of space to work with before that core position is break even. We could drop about 25-30% from where we stand right now to get to that break even point, which is why I do these short-term flips to allow myself a lot of comfortability in these longer-term holds. So for IAN, clear resistance is 650 and 657. Anything under those levels is just a lower high. Looking at it from the weekly time frame, we're in a downtrend. It's a very distinct difference for IAN compared to the names that we just looked at. They're all weak on the daily, but IAN is in a weekly lower high and lower low pattern, whereas CWeb and TRUL are still in a higher low pattern. So there's a distinct difference between that. And on the monthly time frame, we are still looking at an equilibrium on IAN on the monthly chart, but we have not formed a higher low at this point. So we have some names in the MJ sector that are looking for monthly higher lows, but they're very weak right now. And I'm thinking about APHA over on the Canadian side, very weak, but looking for a monthly higher low. Cron, very weak on the daily recently, but looking for a monthly higher low. So keep in mind the longer term perspective, and then we look for the details zooming in from there. So we need a daily trend change as step number one. We would need a weekly trend change to be confident the monthly higher low has been set for IAN. But I can tell already that this is a pattern on the monthly time frame for IAN that I'm going to be watching likely for the rest of 2019, because we have another 6 months of trading, and we could easily see this pattern tighten up into Q4 2019 before we look for a clear break. HARV is also seeing some weakness. 1049 is the lowest price of consolidation, and the bulls are doing everything they can to defend that level. And just looking back at its peers, CWeb and IAN and all these other names that we're seeing a similar pattern, they all already broke bearish. So we have multiple bottoms at 1049, but we can say the odds are more likely than not that we're going to break that support level. It's a potential stop to be watching for And if the bulls are going to hold 1049, they have to break 1139, 1138, 1139, and 1140 is a triple top right here. We're going to have to break that level in order to get any kind of confidence that 1049 can hold, because as of right now, it does look like that level is going to be tested on Monday morning. Weekly time frame for HARV is close to confirming a downtrend with a lower high and lower low, and a break at 1049 would confirm that and significantly shift things. OH saw a flush. We were watching 1077 as the must-hold daily higher low level for OH, and the bulls are holding that level. We bounced above that support by 8 cents. So we're calling that essentially a double bottom. We know that anything on this daily chart under 1310 is a lower high because we have that pattern where every single candlestick is a lower high. Actually looks like we had a little higher high by 1 penny, but every single candlestick we can use a little bit of our analyst discretion, and say that it's a lower high. Every candlestick 8 days in a row have to break that pattern with bounce follow through on Monday, and 1223 is the most important short-term resistance for me, but we have a tightening range forming and still maintaining the weekly uptrend, and the bulls want to make their way back to the middle of this point because what I'm watching, again, this is one of the charts where if you put it on the 2-day time frame, it smooths out. So we have our high, our low, essentially a triple top here, and now a double bottom. So the range is continuing to tighten, and the bulls want to make their way back to the midpoint of that range. Getting over $12 will put us into this tightening range, and we'll look for that break to occur sometime in June or July. But we do still need more bull bounce follow through to get back to the middle of this range. And again, just looking at it, 1077 to 1310, we're looking at about $2.40. So a midway point would be at about pretty much $12. So bulls do want a bit more follow through. CL looking very similar, but we didn't come as close to support breaking. 1416 was the most important support level for CL. And again, same thing. These charts are very similar because we're just waiting for the deal to go through for CL to overtake OH. But we are still in this pattern. And again, the bulls want to make it to the midway point. And right now, if this is our high or low, we'll call it 15. And our resistance is up there, pretty much a $3.50 range. So half of that, we want to get back to 1640 or so to put us back into the midway point of this tightening range. Liking the way this chart is shaping up. Again, as you know at this point, I love tightening ranges for clarity when the breaks occur. The tighter the better. And I'm going to be keeping an eye on CL and OH into the end of May and early June to be looking for these tightening ranges to give us some clear breaks. GTII, haven't really been covering it recently, and honestly, it's just because it doesn't interest me. We have a little weekly downtrend. Well, I won't call it a weekly downtrend yet. We have the most important support for me is 1575, and if that level were to break, it would be a big red flag. But the daily chart has certainly lost its mojo. When's the last time we've seen 2 green days in a row? And the answer is the end of March. So it's been almost 6 weeks without 2 green days in a row. Why would I have any interest in a stock as a bull that can't put together 2 green days in a row? And I take that back. We did see a very weak 2 green days there, but you get the point. If we're not seeing momentum and I'm looking bullish, and if it's not for fundamental reasons, it's for trading reasons, I'm looking at the names that are in uptrends. So we can say that anything here on the daily under 1860 is just a lower high. Bulls have to change the daily trend to try and shift this momentum. And you can see aside from this little big bull move that we did see, the little big bull move, aside from that at the end of March, that 2-day move, it's been vastly controlled by these bears more so than the bulls. So it just is a lack of interest in the bulls, which means a lack of interest in me in this current market environment. MedMen. So we're looking down at the all-time low. That low of the week, 324, is just a few percent, 3% above the all-time low of 311. It's a bear flag on the daily time frame right now. We had a change of trend on the hourly chart, and I take that back. It was actually a bounce straight from the low, but no follow-through at this point. We haven't even changed the hourly trend. We haven't confirmed a higher low and higher high. So at this point, if we keep pulling back, I would say the most bearish scenario for MedMen would be to pull back, form a higher low somewhere in the 330s, a lower high compared to the 356 top, and then lose or just follow through with continuation of the lower high and lower low pattern on the hourly to send us back down towards recent support. I still have no interest in MedMen, and especially if we drop to all-time lows, I'll be interested if we can change the daily trend, but we are in a very clear daily and weekly downtrend, and until that changes, until there is some kind of sentiment shift, again, in my opinion, as a trader, hype is way more important in the short term than fundamentals. MedMen may have, all these things going for them fundamentally. That's great. They certainly have their issues as far as drama goes, but in short-term direction, it's all about momentum and hype for the market. And if bulls are not interested in MedMen, it doesn't matter what the fundamentals are, because we're not going to see a shift and the bulls turn around momentum. So it's the kind of scenario where I need to see the shift in momentum take place with the daily higher low and higher high. If that means it's 15% off the bottom, that's fine, because I know that I'll have the wind at my back if I'm looking bullish. Even though I didn't nail the bottom, it's fine that you can get in a little bit later, eliminate a lot of risk to give up a little bit of reward for that trend change. So patiently keeping an eye on it, but until we change this daily trend, I personally have no interest in MedMen. KSHB is also in a daily downtrend, lower highs and lower lows. Let's not forget the longer term perspective. KSHB on the monthly time frame really needs to hold this support of 437, which we are approaching. It's a bit choppy on the monthly chart. The weekly time frame certainly broke this equilibrium bearish. The bear break took place at 544, and if we use that level as a stop, we end up saving over 10% from where we stand right now. So the longer term pattern is certainly important here, and it's another one where anything under 534 is just a daily lower high. We have to change the daily trend, we have to change the weekly trend, and we're not anywhere near doing that in the short term. So again, with all the names that we've covered that have looked weak at this point, we have to keep in mind that the S&P 500 has seen some weakness in the past week, but with where we closed in the S&P 500 Friday, only 20 days in the history of the S&P 500 have closed stronger. So overall, big picture, it is still holding on really well. And if we're seeing weakness in these names and the S&P 500 is still in a weekly uptrend, what happens if we lose the weekly uptrend in the S&P 500? So that's still an overlying thought that I have in my head for all of these setups. So rather than looking for weakness, I'm only playing these strong names and patiently waiting for trend changes for looking at bullish entries. CVSI on the daily chart, anything under 536 is just a lower high. We are still looking for a weekly higher low. So this is a different chart setup. If it were in a weekly downtrend, I would have no interest. But because we're in a weekly uptrend, I'm looking for a higher low compared to 433. We bounced off of 444. So that's a potential bottom fishing play, looking for the weekly uptrend to be maintained. And we need the daily chart to change the trend to be confident that we can hold the weekly uptrend. Looking at the potential of a 4-hour inverse head and shoulders pattern, although I don't really like the clarity on the 4-hour. Let's see the hourly here. I like the daily better. So it's really just this little bounce attempt as the left shoulder. This would be our head. If we set a lower high compared to 536, that's our right neckline. We then have to pull back and form the higher low, and then breaking whatever resistance and 536 at the same time would be the clear inverse head and shoulders trend change. It's a little bit premature to be looking for this pattern, but if we break from 536, or if we fail to break 536, we have to pull back and form that daily higher low. So again, CVSI would have my interest much more than any of the other weak names that we looked at, because the longer term trend is dictating where my interest lies. And if it's in a weekly uptrend, even though it's weak on the daily, I'm interested in it because I have that clear weekly support level to be going off of, and it is still in an uptrend. NBEV trading sideways, still in its tight range, 502 and 505, short-term supports. Bulls have to get over 541 to stay in this range. It's an equilibrium, it's just not a pretty one. 669 is resistance. We've got our support at 502, lower high of 613, higher low at 505. And we're looking for a lower high compared to 613, but the bulls want to make their way back towards the middle of the range, and we're going to have to get over 550 to do so. So bulls need that break of 541 early this week to stay in this tightening range, and the tighter it gets, the more interested I'll be. Certainly it's been tight the last 8 days, and bulls could make an entry on a 541 break, just being aware that the likely scenario after breaking 541 is a lower high compared to 613. So that's the kind of scenario where I just take it as a short-term trade, and that's what I did with IAN. So IAN on the daily chart, we were looking for just a daily lower high on the bounce, which is why I exited on the first and second day of that bounce, knowing that the broader pattern was going to be dictating the most likely short-term scenario. SNN, anything on the daily under 451 is just a lower high. Looking at the weekly chart, we have lost the uptrend. I have no interest in this name because we are not in a weekly uptrend at this point. So we're looking down now at the next support. After 390, there's nothing nearby for clear support levels established, and it is just a weak name that has pulled back very significantly in the last 2 weeks. So again, only names I'm interested in this sector as a bull are the names that are either in weekly uptrends or daily uptrends or looking for monthly higher lows. So I was interested in Cron most recently because I like its monthly chart. So longer term patterns are dictating who I am interested in. If you're shorting these names, it's a completely different scenario. I personally am not shorting in this sector, and that's probably going to stay the case for the most part, just because it's much easier to go long than it is to go short on a lot of these brokers in the US, and also the fact that, in my opinion, the money to be made is easier going bullish in a bullish sector overall. SLNG. So SLNG is a nice tightening pattern. This is definitely one to be watching. So we have our equilibrium forming here, 290, 219, lower high was 280, held, well actually we broke 219 by a penny, that's a double bottom, and now we're looking at 262 and 280 resistance as the bulls make their way back towards the middle of this range. And at this point, if 218 is our low and 280 is our last high, that's about a 62 cent range. So we're looking to get to the midway point of 249. So we're almost there. And again, this is another one to be watching towards the end of May because we're likely going to form a lower high compared to 280, pull back, form a higher low compared to 218, and see this range continue to tighten up. Weekly time frame is showing that equilibrium a little bit more condensed. So scouting for the lower high compared to 280, this is one to keep on watch for a break of a tightening range eventually a few weeks down the line, most likely. PLTH is fading, a slow fade here. No red flags there just because of how hard we ran up. The weekly time frame is looking for a higher low to form. Anything above 170 maintains the weekly uptrend. So this is one to be watching for a weekly higher low to form. Anything on the daily chart under 344 is just a lower high. But if we were to get to daily oversold conditions, that's the kind of setup. Again, if I'm looking for a daily higher low, hourly oversold has my interest. If I'm looking for a weekly or monthly higher low, daily oversold has my interest. So these shorter term time frames lining up with the longer term perspectives and setups give us timing clues. So for PLTH, if we continue weak and don't change this daily trend, I would be holding off and waiting for perhaps the lower $2 range and daily oversold conditions to look for that weekly higher low to form. So I would remain patient because there's no sign of a support level being established in this range, and there's also a lack of support established on the way up because the bulls were so strong. PYX back down towards its low of 1666, a very nice bounce that did not materialize into a daily trend change. So we saw the bounce from the lows straight to the high. We never had a daily higher low and higher high confirming a trend change, and here we are back down at 1666. It was a nice bottom fishing play on Friday, held support by 6 pennies. Anything under 2055 is just a daily lower high. Have to break the daily lower highs to try and hold a double bottom here because this weekly chart certainly looks like a bear flag. And the bears have the odds in their favor at this point. And if we do break that 16, make that 1666, if we break that clearly, it is a big red flag that we did not get any follow through after this size of a bounce from the low to the high. We saw almost a 50% bounce. It was about 42%. And to get no follow through after a 42% bounce, it would be a red flag. But at this point, a bottom fishing play to be keeping an eye on. ZYNE, definitely the top of the list to be watching this coming week, along with Curaleaf. We have a higher low and higher high, still maintaining the daily uptrend. Our most important support level is 1135 to keep the uptrend. And the bulls need to break 1333 for a new high on this bull move. So very strong. Holding the 12 period exponential moving average support every period of consolidation over the last couple months. And it's just a test of 1333 coming Monday or Tuesday. Nice little uptick in bull volume after a daily higher low had been established. And the weekly chart looking to continue breakout mode. If we can get over 1333 as resistance, the next level that we're going to be looking at is up at 14 and 1445. So still strong and still in control of those bulls. BAMM. So looking on the weekly perspective here, we have our high, low of consolidation, and we are looking for a weekly lower high to be set. So this is the kind of example where I'm looking at the broader, longer term perspective to dictate what my decision making would be. So if I look at this daily chart and say, oh man, the bulls have been in control the last 2 weeks, they're seeing a really nice recovery, I want to make an entry here. I want to get back in for the bulls. And then I look at this weekly chart and say, well, we've already bounced a significant percentage. The odds that we're just going to form a weekly lower high compared to 371 and to continue to tighten are more likely than not. So what is the amount of bull follow through I could see from this area knowing a lower high is coming? It's not a good risk to reward scenario in my opinion. At this point, we've already bounced about 60% in the last 2 weeks. And certainly it's a high risk, high reward name, but I would be looking for a lower high compared to 371 unless we see a significant bull volume spike to start this coming week. And then we would look for a pullback and a higher low compared to 155 as this weekly range continues to tighten in an equilibrium. So that's the most likely scenario. Obviously, it doesn't happen all the time, but I want to put myself in the scenario or in a situation where the most likely favors what I'm looking to do and favors my trade for profitability. So at this point, if I were not in a position on BAM, I would just say, all right, well, I'm going to wait for this weekly chart to tighten because I feel like that's the most likely scenario, and then perhaps I'll play it when the weekly chart breaks its tightening pattern. Tilt is coming down towards the all-time low. The weekly time frame is the most important because the clarity of the lower highs. Anything on the weekly under 302 is just a lower high. The all-time low is 151 and we bounced off 161. It would be a huge red flag if we break 151. I don't care what the fundamentals are of this company. If we break to all-time lows from here, it tells me the share structure and the debt structure are not ideal for this company. If you have the MJ market from December all performing very well, if you look at CGC from December and all these major names, Curaleaf and the stronger USMJ names, and you see that we've been fading literally the entire first 5 months, four and a half months of this year, and you compare that to the rest of the sector, you can say, number one, clearly we're not correlating with the strongest names in this sector. And number two, there's a reason we're continuing to fade here and volume is picking up. So again, it can be a great story. I used to fall in love with stock fundamental stories when I was back losing money trading penny stocks, or the times when I lost money trading penny stocks. It was because I fell in love with a fundamental story. And what I learned is the share structure and debt structure matters so much more than the fundamentals in the short term, because you can have a great story, but if you're seeing dilution or if you're seeing increase in shares, which is dilution, then that is going to be it's going to have a higher impact than whatever that bullish story is. So I don't know the specifics of the fundamentals, or I should say of the share structure of Tilt. I haven't read the financials in depth, but I just can easily say to myself, if this breaks 151 in this kind of market environment that we've been seeing in 2019, it would be a big red flag for me. So it's a potential bottom fishing play off of that. We had a big green day on Friday. Resistance is going to be 238. Anything under that's just a daily lower high. If the bulls can change the daily trend from here, I'll have interest. But with this weekly downtrend so clear, really it's going to take a weekly trend change to get that interest from me. And the best case scenario for the bulls, in my opinion, would be a left shoulder, a head, and if we cannot, that's not a good drawing. If we cannot break this resistance of 302, which I would assume we can't break on the first attempt, we would look for a weekly lower high to form compared to 302. We'd have to pull back, form a higher low compared to our recent low of 161, and then we would have to change the weekly trend. That's when I would be interested in Tilt, and not a moment before then, because of how precarious the situation is compared to the all-time low. If you made a bottom fishing play off of that all-time low, you're pretty comfortable, and that was a good entry point. But otherwise, the weekly time frame has the most clarity for me, and that's what I'd be patiently waiting for. So that's where we stand overall. We have some lead bulls standing out. Curaleaf standing out. ZYNE is standing out for strength. We have weekly uptrends still intact on names like CVSI, where the bulls need to show up in the near term, and we can be making plays off of those weekly support levels, anticipating the bulls will defend the uptrends. But other than that, there's a whole bunch of names that are in weekly downtrends. They're losing support. The daily chart is showing a lot of weakness, and we just have to keep in mind that we want to be playing in the direction of the trends. If you're looking at a long-term strategy and you're scaling into weakness, that's completely different, and that's just fine. But I'm looking at short-term strength in the sector for what I want to be trading for my short-term trades. As far as my long-term positions, I've got a Curaleaf and an IAN long-term position at this point. And like I said, that IAN position is small and I'm very comfortable with where the break-even point is. But other than that, I'm patiently waiting and not going to be looking to scale in to any long-term positions unless the longer-term patterns on the weekly time frame at a minimum are dictating that. So again, names like CL and OH, I do have interest in them because we are still in a tightening range. So I may look to enter some potential long-term positions in CL. I'd actually have to do the calculation between the premium of CL and OH before I decided who I would play. But if we were to see this pattern shape up and I could make an entry based off of support and have a clear stop level where if it broke, we would be shifting weekly momentum, that's the kind of trade that I want to be in. A very clear exit point where I would take a step back and reassess the situation. And if we don't break that exit point, we're still in a weekly uptrend and we'd be looking for all-time highs potentially. So I hope you're well. Hope you had a good weekend. We'll be back to the normal routine this coming week, and we will see you then. No updates here at the end of the video. Going to be putting out some Rocky Mountain National Park footage and some Colorado stuff early next week. But until then, I don't know, watch TV. Low, high, higher, low, lower, high, higher, low, low, high, higher, low, lower, high, higher, low, low, high, higher, low, lower, high, higher, low, low, high, higher, low, lower, high. Sorry, I just blacked out.